In this video, I'm going to demonstrate how a quick Google search returned a profitable, free Forex strategy with an equity curve that looks a little bit like this. I'm always looking for new strategy ideas, so I thought it'd be interesting to go to either Google or YouTube and to see if I can find some published entries and exits which I can actually make work. I went to Google and typed in Forex candlestick patterns, and looking at the first result I clicked on from ig.com. Quickly scrolling down, I found something that piqued my interest, and it's called Three White Soldiers, and here it is here. And for this entry I'm just looking for 3 green candles or 3 white soldiers, and I'm also going to do the opposite to trade in the opposite direction. Look for 3 red candles and see if, combined with a stop loss and an exit, I can make something work. So I programmed the 3 white soldiers along with an additional trend filter, added a stop loss, and also tried out an additional exit. I first applied it to the daily charts, and straight away I found on Australian dollar versus the US dollar something that has potential. Shortly we'll take a look at the results, but let's first go over to the whiteboard and I'll show you the exact rules, including that trend filter which I've added. In the article they called this entry the 3 white soldiers, and it's 3 white candles or 3 green candles. It's the same thing. Now what they said was if they saw 3 green candles in a row like that, that was a good entry indicator to go long, or that there was a longer term bull trend starting. They didn't mention anything about short trading. However, I've taken what they said and I've actually flipped it. I've actually reversed it, and I've actually said if there's going to be 3 strong bull candles, then I want to go short. Now I've also added in one more bar, like a confirmation bar. So if we're going to go short, we want to see the 3 green candles, then 1 red one. That's our signal to go short, and the opposite for long. If we see 3 red candles, then 1 green bar, that's our indication to go long. Now, in the article, they did mention something about a trend filter, and I think that's a good idea. So I've included something ever so simple. I'm saying that if we're going to go long, if we're going to look for buy trades, then we want to be in some sort of longer term bull trend. So I've just said I want the close of the most recent bar to be higher than the bar 30 bars ago, or 30 days ago in this case. And the opposite for short, we want to see the close of that bar less than the close 30 bars or 30 days ago. So we're looking at longer term trends and then slight pullbacks using these 3 or 4 bar formations. Now at the moment we're only looking at entries, and we can use just the entries because this can make up a stop and reverse type strategy. In that case, the exit from a long trade would be the entry into a short trade, and vice versa will always be in the market. I decided to try a very simple stop loss, and it's just a simple X bar exit. So I've tried something like exit after 5 bars or 5 days in the trade, or 10 bars, 15 bars, just to see how this entry performs. Of course we can try all different sorts of exits, and that's for later study and maybe a later video. And I've also used a simple fixed pip stop loss. So let's go over to the computer and see how it performs. As usual, I've got backtesting data from January 2008 through to the present day, which is the end of October 2021. And I've also included some trading costs. I've included 6 pips or $60 for this test using 1 full lot. On this first chart then, this is the daily chart, and you can see a couple of entries here. So we've got 3 red candles, then the green candle, and that was a profitable trade. We didn't get out until we went short. We had the 3 green candles, the red candle, and then we've exited the long position and gone short on the next bar. The reason we didn't go short on this bar here, we've got the 3 green candles, then a red one, was purely because the longer term trend filter wasn't in play. The close of this red bar here wasn't less than the close 30 bars ago or 30 days ago. It wasn't in a downtrend, so we couldn't take the short trade. So at the moment we're using a stop and reverse strategy with the 300 pip stop loss. And that's the equity curve which you've already seen. We look at the total trade analysis. We can see we've got a massive average trade of over $1,000. The largest losing trade is $3,000. That's our stop loss plus a bit of trading costs. Now, it doesn't trade too often because this is a stop and reverse strategy, only 67 trades over that test period. And notice that the average bars in trade, we're in trades almost 50 days. But what if we want to take more trades than that? Well, that's where I introduce that other exit. So exit after X amount of bars. So I found that 15 bars works quite well with Australian dollar, US dollar. So if I put in 15 bars for my timed exit, you can see we get out of trades much quicker. So we're in a long trade, we've exited our long trade, we don't enter that short trade. So now we've got many more trades, we've got 135 trades, much smaller average trade, still a decent size average trade. The largest losing trade is the same. And the equity curve, while some quite a volatile period around here, certainly moving up into the right direction. So that simple 4 candlestick pattern shows some promise, doesn't it? Well, Australian dollar, US dollar was the first market I tested. But what about euro dollar? Let's have a look at that. Here's the same strategy with euro dollar. We've got the 300 pip stop loss. And for the longer term trend filter, we're looking at 40 bars ago, not 30 bars ago. There's the equity curve. Again, there's some drawdown periods, but it's certainly moving in the right direction. Combined with a large average trade of $849, same stop loss, and we're actually in trades very similar amount of time. But of course we could add an additional exit to the euro dollar strategy as well. Might just be that simple timed exit, might be a first profitable close or some other exit. There's lots we could play around with and find something which works. Next I'm going to show you another market. I'm going to show you US dollar versus the Japanese yen. But before we do that, if you're enjoying this video, then please give it a thumbs up and maybe subscribe to the channel if you want to see more videos just like this one. And if you like this type of trading strategy, then have a look down in the description down below. You'll find a link to a free 22-page Beat the Markets strategy guidebook. And if you use that link, you can get it for free today. And that includes 3 trading strategies or rule-based strategies, a little bit like this. And they're the viewers' favourite strategies. So if you're looking for more ideas already done, then you can grab that. Now let's have a look at this 4-bar pattern on US dollar versus Japanese yen. Here we are on US dollar Japanese yen, and we're using the 30 bars for the look back period for the trend filter and a 300 pip stop loss. So very similar rules. And there's the equity curve, and that's not something that I would want to trade. I'm sure it's probably not something you would want to trade either. It's nowhere near as consistent as the behaviour using the Australian dollar or euro dollar. So don't just assume that if it works on 1 or 2 markets, then it's going to work on all the Forex markets. That's rarely the case. You really need to test every market out and test every time frame. I haven't thoroughly tested all the markets and different time frames yet, and I have some different exit ideas that I want to have a look through too. So in conclusion, it can be quite easy to come up with or find, just for a Google search, an entry idea which does work. This one was just a 5-minute Google search. The harder part is coming up with exits or maybe additional filters and then testing over a wide range of markets and timeframes to find something which does work. But after a while of developing strategy after strategy, you do get an understanding of what might work and what won't. And of course, the use of software such as what I use, multi-charts, speeds things up no end. So I hope you guys have enjoyed this video, and thanks for hanging around until the end. But until the next one, this is Jared Goodwin, and thank you.